The thing to understand about trading is that you don't need to place a lot of trades to make money in the market. You see sometimes on YouTube that people talk about they take 10, 15 trades a day, make so much money every day, but this is not the full picture of what trading is really about. Today I want to share with you the opposite of that, which is how I make a fairly good living by placing only 2 to 5 trades in the market every week. Alright, so let's talk over in this video here, and I'm not sure how I'm going to address this because most people will say, well, screw this, I just want to learn the strategy, the setups, and give me the how you enter trading stuff. And I've done videos on that in the past. I've done a video a few days ago on this, which I'll leave here in the corner if you want to watch it. So this video here won't discuss strategies or anything of the sort, but I'll share with you more details about how you can make a living in the market by taking only 2 to 5 trades per week. Now, it could be more, it could be less, doesn't matter. Like, you don't have to take this exact number of trades, but we'll go through the math behind some mindset shift, things you gotta change in order to make a good living, good income in the market by taking less trades, spending less time at your charts, and doing other stuff on the side as well. Now, the first thing we need to think about is a mindset shift. You gotta change your mindset from taking more trades and instead focusing on making more money. Now, you see online people say, oh, you gotta make 1% a day, but they don't realize that if you do that over time, that's like a huge amount of money at the end of the year. And most traders just cannot achieve that because they have some risk around it too. If you make 100% per year, you gotta be willing to lose at least 50% of your account in 1 year. And of course, it's scary because then you gotta make it back double to just get back to that full amount that you had before. But back to the main point here, which is you don't have to take many trades to make money in the market. You can take 1 trade a month, 12 trades per year, and have this be plenty of money. Have this be more than a guy who's in the market 8 hours a day placing trades all the time. Think about, first of all, this capital. If you have a big account, you'll make more money with just fewer trades than the guy who has a small account but takes so many trades. And of course, there are platforms that can get you funded for that capital. There's many ways to go around it. And then there's a reward. What if you're someone who takes 12 trades a year, but you look for big targets in these trades? They can do like 5, maybe 10 R on these trades. Like, that's more than a guy who's taking only 1 R all the time, getting like a 60% win rate and winning all the time. You can make more money than that guy with much less trades per year. Then there's opportunity cost. What if you are taking less trades a year? Let's say like 12, maybe like an extreme example. But let's say you're taking, in my case, around 200 trades per year in total. That means that you have other time to do other stuff. So you have less time spent in trading, because the more time you spend on the chart, it's time you wasted doing other things. You could have been taking that time to do other stuff you like, your passions. You could have been flying planes. You could have been doing other stuff. You could have been traveling, helping people. You could have been working on a new business, and all this time wasted. Sure, you make money trading, but you don't make money in other ways. And that's the opportunity cost of trading, being in the chart, looking for trades. Because sometimes you'll be at the chart like the whole day, there's nothing happening. And you wasted that whole day we could have been using that day for something better. Now think about it. So by taking less trades, you can make more money because you have time to start a business. You have start to do other stuff. Like for me, I run a business where I teach people how to trade. I do other stuff on the side of that. And that time is sometimes a lot more productive than being in a chart looking for trades. In most cases, of course. So change your mindset that more money doesn't require to take more trades. And it's not because you take a lot of trades, you make a lot of money in the market. Now, when it comes to me, I'm a person who's fairly risk averse. I don't like to take too much risk because, of course, like there's always a calculated risk. You can take risk all you want, but you need to be careful around it anyway. So I never want to lose more than 20% of my account on my overall portfolio of trading. So it means if I have $100,000, for example, then I don't want to lose more than $20,000 in any given period of time, okay? On all my trades together, combined, over time. So that means that I need to be able to build my portfolio in that sense. I need to be able to have a strategy that's good enough, giving me not these big drawdowns. And I need to be good with my execution too. Because if you have a good strategy, but then you miss some trades, you make some mistakes, you might get further than that 20% drawdown. And for me, 20% is the maximum I'm really comfortable with. 10% would be ideal, of course, but 10% means you have to take a lot less risk. On 10% drawdown, I might make only maybe 20% a year, and that's a little bit limited. But on a 20% drawdown, I can make at least 40-50% a year on a good year. It could be less, of course. There's always like a mean average. Some years are less, some years are more, but roughly around that level. And to me, that makes sense. Okay, but beyond 20%, I would feel more stressed. I would feel a lot more pressure to perform, and it would be tougher to get back on track and get out of that drawdown. So it's my sweet spot, of course, could be different for you. You have different personalities, different rules, but you need to have that limit where you're comfortable losing and not take too much risk beyond that. So this brings us to here the big point, which is what kind of strategy you're going to trade. Like, what's the strategy behind it? How you're going to do things? What trades you're going to take? And here you need to take a portfolio approach, not just having one strategy and trading it all the time. But I really believe if you want to have more consistency, a portfolio is better. Meaning you can trade more things. I trade for myself 3 strategies, 3 main ones. Then I have algos running on the side as well that take trades for me that I've built over time. These algos are helping me improve my portfolio, my execution overall. So all these things combined sort of create something that's pretty alright for your trading results. And from there, we kind of work it backward to find out how much capital you need for trading. And I'm going to take anywhere from between 100 and maybe 200 trades a year total for my 2 to 5 trades a week. Some weeks are more, some weeks are less, but around the average is, let's say, 100 to 200 trades a year. I know it might seem like a wide range, but there's so many different circumstances in the market, different events, different things that make it you can trade more one year or less the other years. I had a year where I took many trades during the elections, and I boosted my total to be on 200 trades. Other years where the market was slower, I didn't really understand how it worked, I didn't really kind of spend too much time on trading, and it would take maybe 100 trades and not much more than that. All depends on this kind of circumstances. And this is where the math comes in. So let's dive in the math and show you how that all works out.
Right, so let's talk about the math that's behind this whole thing of placing fewer trades, 2 to 5 trades a week, and making a living from it. So we'll go through it all, and I'm going to use some numbers here that are going to be more simplified. So these numbers, they will probably not be accurate for you anyway, but they kind of reflect my own trading, and of course they are simplified. So let's just think about that. So let's say the income I want to make to be able to cover my expenses is, let's say, $8,000 a month. Okay, I'm gonna give me some buffer here because 8,000 is not bad. It's pretty good amount. I spend less than that myself on most months, but let's just say you want to make more money, so totally fine. Which will be around like 100K per year, right? So we'll just move this out to 100K a year. Roughly, okay? So we oversimplify here a little bit, but that's gonna help us to calculate this correctly. So let's say on a given year, I take between 100 and 200 trades. Okay, that's gonna be my average of trades per year. Okay, per year total. Now, of course, some years are gonna be higher. They're gonna be at the top of this range. Some years are gonna be lower at the bottom of this range. But we can sort of like calculate an average of these numbers and then decide how much capital we need for our trading. I'm just going to keep it very simple here, very straightforward. Let's say I'm taking 150 trades a year. All my calculation here will be based on 150 trades in the future. Okay, so let's say every year I take 150 trades and I want to make $100,000. That's my goal, okay, from trading. So of course, we'll have some more steps after that, but let's just simplify it and go with it for now. Out of 150 trades, what is my win rate and what is my reward to risk on these trades? Now I have multiple strategies, so here I'm going to very much simplify it all into simple numbers. But let's just say that my average reward to risk is 2.2. So each time I risk $1 and I win, then I'll make $2.2. Okay. So again, oversimplified, but that makes sense. Now with all my strategies, it will be around that number, maybe a little bit higher, because some of our strategies are a little bit more longer time frame. Especially my weekly chart strategy is based on much bigger targets. But the other ones are basically mostly 2 to 1s. Okay, so let's just say 2.2. Okay, all right. Now let's think about what's my win rate. My win rate is around 48% on average. Okay, so meaning I'm losing around 52% of my trades. So 48% win rate. Now from these we can calculate our expectancy per year. We know in that year we're going to win 72 trades and we'll lose around 78 trades. Okay, of course, average here, I know, but we need these numbers here to get some calculation done. Otherwise, we're not going to get anything done. So we might as well calculate this with some average numbers. On my winning trade, I make 2.2. And on my losing trade, I lose 1. So let's calculate that. 72 times 2.2 minus 78 times 1. So that's fine. So that will be 80. That number might seem a little bit high because that will be basically if you risk 1% per trade, that will probably be around 80% per year that you make in the market, which is fair, it's acceptable. The real number will be different. This is an oversimplification, okay? So this is a big number. Now on this, there will be trades we miss. There will be different things happening. There will be some drawdowns, some mistakes we make. So we cannot count this to be total fair all the time, okay? This is a oversimplification of things, but it still gives us a good idea of like what we have to aim for. Later on, I'll show you how to add some buffer to it, that like what your target should be, what your goal should be, and we'll just go through that. But that's a oversimplification. So 80% per year, that would be the goal. Now, if I make 80% a year and I want to be able to reach $100,000 in that year, what would be my account balance? Well, you look at what is 80% of your current balance in your account. So you do 100,000 divided by 80%, and that will give you overall a $125,000 account. Now that doesn't take into account the fact that you might want to build your account, you want to grow this account over time. That would be you make 80%, you spend it all on that year on your income. Now we'll look at why that doesn't work out really well very soon in a few seconds, but that will be what we aim for because that gives you a goal of what to aim for. You might want to increase that a little bit more. So let's say if your goal was to make the money, and then you can double that money. So you can save half of it, then the other half you spend it. Then you can just look at double than that. 100K a year here will be only half of your profit. Then you can simply double that. Okay, that will give you a different account balance. You have more buffer here. So instead of trying to do this with the $25,000 account, you could do 250, and 250,000 times 80% a year. That gives you $200,000 in that year. Okay, so you can earn, you spend half of it, save half of it for your own account to grow, and that could be a good strategy as well. Okay, so you can play with these numbers. Now, this shouldn't be a discouraging amount. This should be something you are motivated toward achieving. It should be a challenge. It should be a goal that you have, that you keep for yourself, of how much money you need to have. Of course, there's going to be platforms here. There's going to be different ways to get funded, get more capital. It shouldn't be like, oh, it's too much money, I'm never going to get there in my life. It's impossible. It should be a good goal to aim toward. And I'll tell you, 250,000 if you trade well, if you have good risk management, if you follow your plan, you have a good portfolio, easy to get. It's going to be one of the easiest things to get. Okay, so keep that in mind. And let's go back to the video.
So now you get a better picture of what kind of capital you need for this exact amount of money you want to make per month. But this is not accurate, okay? Because of the fact that if we spend $4,000 a month and we make $4,000 a month in the market, we have a big problem. Because we're not going to build a capital, first of all. We're never going to grow our account because we spend what we earn. But also, what if we hit a bad month? What if we hit a month where we lose even like 5% of our account? And then we have to pay our bills, we have to do this and that. Our account will decrease and we'll lose money over time. And of course, you see that that's a bad thing. So we can never aim for our monthly returns in the market to be our monthly expenses. What I like to do myself is I like to give myself a buffer, because my expenses are never the same. They vary. Sometimes I do more stuff. Sometimes I travel more. Sometimes I travel less. So I give myself a buffer, a roughly 20 to 50% buffer. So if I spend $4,000 a month, I'll give myself maybe $6,000 a month. So 50% more, just to be safe. Then my monthly target returns in the market should be at least 2 to 3 times that. I'm never going to make only $6,000 a month if I have to spend that amount of money to live. That's stupid. So I want to make 2 to 3 times this to feel safer, feel more comfortable, and reduce my stress by a lot. So if I spend $6,000 a month with my buffer, my goal would be to make at least $12,000 or ideally $18,000 a month. Now, you see how that's a big gap. Like, that's a big range. For most people, making $18,000 a month is a lot of money, but it's actually not that much for me anymore. I give myself room to grow in that case, and now I'm able to make way beyond that. Of course, I don't spend all of it. That's the goal. You never want to get to a point because you make like $20,000 a month, you spend all that $20,000, or you spend more money because of that. You need to keep your expenses lower. And if your income in trading is not at least 2 to 3 times your monthly expenses, right, on a longer term, a yearly basis maybe, then you need to be able to either reduce your expenses or increase your profit by increasing your capital, by working on your edge. But you never want to get this too close where your returns don't cover your expenses anymore. Then you're stuck, then you have to go back to maybe get a loan. That's not what you want to have, of course. So you have one last big part here to cover, but let me know in the comment section if that makes sense. If you are enjoying this video so far, and let me know what you think, of course, in the comment section. Please give a like to the video. That would be super appreciated. But the last part here we got to talk about is how to maintain success. Because it's good to make money in the market. It's good to be able to have a good return. It's good to have a strategy that works. It's awesome to pay your bills with your trading income. But how do you maintain that success? It's not going to maintain itself. You're not going to be in the market forever. Once you're profitable, make money every month. You got to maintain it. You got to work on your craft. You got to improve, get better, and actually find a way to stay top notch in your trading. First thing is having a development plan, or what I call myself a growth plan as a trader. So a plan on how you're going to become better. You got to figure out what things you're not so good at, what things you could improve right now, then start to work on these things. Make a plan to improve these things over time. Make a plan even if you're good to learn new things. We always have to be aware of new stuff in the market. We have to learn. We might take different coachings or different people and different aspects to become more well-rounded and know more stuff in the market. That's really good. Once you're profitable, you start to learn more. You feel even better about yourself. You learn more, you can become better. And it results, of course, in a better performance over time. So I'm always learning new stuff, always reading books, always taking coachings from different people that I trust and that I believe in and who are helping traders. I'm always trying to kind of experiment with new things, develop new strategies, even though I'm not maybe training them. I still have strategies I work on and that I develop to see how they work, to see if stuff I'm curious about works in the market. And it's very useful for any kind of trader who's making money in the market and paying his bills with trading. You gotta build good habits too. Having habits that you maintain over time, the habits that help you stay top notch, like journaling, of course, backtesting will be one, being able to go back, being able to create a routine for your day that works for you, where you do stuff in the morning, you do stuff at night to get ready for the next day. All this stuff is very useful. Meditation could be good if you're someone who likes meditation, sleeping enough. All these habits take time to develop, but you gotta have them right in place to be able to maintain your success over time. It's not an easy game. Like, to be honest, most people will say, oh, like, you make money in the market, it's easy now, you have a dream life. But it's not so much the case. It's good, the freedom and all that stuff, but there's a lot in the background you don't see on how to maintain that success, how to keep moving forward, that you need to be able to think about in any kind of field. When you make some money, you gotta be able to maintain that success, and that's really crucial. So this is a big overview of all that stuff that goes into making a living trading in only a few trades a week. But let me know in the comment section what topic you want me to cover more of, what questions you have. I'll make sure to answer those questions in the next videos. I will be going more in depth on those, see how I can make a better job of helping you become a better trader. Make sure you're subscribed to that video. I post videos like this 3 times a week, 1 and 2 every Sunday, then 2 videos in the week about trading, some lessons, some tips for myself, some things I learned. And I'll catch you back here in the next video pretty soon. Ciao.